After the 1973 oil crisis, the world was in chaos. Energy shortages spread, markets collapsed, superpowers panicked. But behind closed doors, a new plan was born, one that would reshape global finance forever. In 1974, the US struck a historic deal with Saudi Arabia. America would protect the kingdom with military power, and in return, Saudi Arabia would price all its oil in US dollars. The Saudis agreed. Then the entire OPEC bloc followed. It was the perfect loop. Countries needed oil required dollars, and dollars came from US banks, markets, and bonds. Demand for the dollar exploded, allowing America to print, borrow, and spend like no other nation in history. The petrodollar wasn't just an economic system. It was a financial empire built on oil, trust, and American strength. And for decades, nothing challenged it. Until now. Fast forward to the 21st century. The world had changed. The US was no longer the undisputed industrial giant. New powers had emerged, hungry, ambitious, and independent. China became the world's largest oil importer. India's economy ballooned. Russia became a dominant energy superpower. The Middle East diversified. Africa and Latin America grew tired of dollar dependence. Nations began asking a dangerous question. Why should we keep trading oil in dollars? Behind the scenes, new alliances formed. China and Russia signed energy deals in yuan. India bought discounted oil from Russia using rupees. Saudi Arabia conducted its first ever oil trade in Chinese currency. BRICS announced plans for a shared financial system. Each agreement was a crack in the petrodollar's foundation. Not big enough to destroy it instantly, but powerful enough to weaken it, piece by piece. For decades, Saudi Arabia was the crown jewel of the petrodollar system. Its commitment to dollar-based oil sales kept the entire structure stable. But in 2024, something happened that stunned the world. Saudi Arabia refused to renew its exclusive petrodollar deal with the US. Instead, Riyadh announced it would begin accepting multiple currencies: yuan, euros, rupees, and even digital payments. It wasn't an attack, it wasn't rebellion, it was survival. The kingdom no longer wanted to depend on a single currency or a single superpower. In a world of shifting alliances, the Saudis wanted flexibility, not loyalty. This move sent shockwaves across global markets. Traders panicked, analysts argued, central banks quietly increased their gold reserves. Because when Saudi Arabia steps back from the dollar, the petrodollar system loses its heartbeat. As dollar dominance weakens, a new battleground is emerging, the fight for the world's next reserve currency. China is pushing the Petro-Yuan, backed by oil, metals, and state-controlled markets. BRICS nations are building alternative payment networks. Russia wants a commodity-backed currency. The Middle East is developing regional digital coins. Africa is creating unified trade systems. For the first time in modern history, the world is multipolar. No single power controls energy. No single currency controls trade. No single nation dictates the rules. This isn't a collapse, it's a recalibration, a global shift away from one center of gravity. But transitions are never smooth. As the petrodollar fades, countries scramble to protect their economies. Some build alliances, some seek independence, others prepare for turbulence. The currency war has begun, and the world is choosing sides. Without the petrodollar, America faces a new reality. Foreign nations no longer need massive reserves of US dollars. They no longer need to buy US Treasury bonds, and they no longer fund American debt at the same scale. This means one thing: the US must stand on its own economic strength, not on petrodollar privilege. The consequences are dramatic. Higher inflation, higher borrowing costs, more market volatility, and a shrinking global safety net. For decades, America lived in a world where it could print money without fear. Now, that world is disappearing. The fall of the petrodollar doesn't guarantee a US collapse, but it guarantees a US transformation. A new chapter is beginning, one where American power must be earned, not inherited.
So what happens next? The world is moving toward a diversified currency landscape, not a single replacement for the dollar, but a basket of regional systems. The Petro-Yuan in Asia, the digital dirham in the Middle East, rupee-based energy trade in South Asia, commodity-linked currencies in Russia and Africa, gold-backed settlement networks for BRICS. In this future, no nation enjoys unlimited financial privilege. Every country, including the US, must compete. For investors, this shift is both dangerous and full of opportunity. Gold and commodities may strengthen, emerging markets may rise, energy trade will diversify, and the global monetary system will become more dynamic and more unpredictable. The end of the petrodollar isn't the end of the world, it's the end of an era and the beginning of the next monetary age. China sees what America once saw in the 1970s, a chance to rewrite the rules, not through war, but through currency. Beijing launches the Petro-Yuan initiative, offering long-term oil contracts backed by gold reserves. Not just paper promises, real assets. For energy exporters struggling under dollar pressure, the offer is irresistible. Sudan signs first, then Nigeria, then shockingly, Saudi Arabia opens negotiations. Western analysts panic. If the world's most powerful oil nation shifts even 25% of its sales to yuan, the balance of global finance tilts overnight. Inside China's Politburo, one strategist whispers, "This is how empires fall." Quietly, the world watches as the Petro-Yuan rises, steadily, silently, strategically. America isn't watching from the sidelines. Washington has survived recessions, wars, and crises, but this challenge is different. This time, the threat isn't military, it's monetary. The US launches a full-scale financial counterstrike. New trade alliances, renewed ties with Europe, aggressive rate hikes, fresh military deals with Gulf states. Treasury officials travel the world, telling leaders, the dollar may be flawed, but it is stable. Behind closed doors, cyber teams disrupt digital currency pilots in rival nations. Congress pushes for a US digital dollar, fast, trackable, globally compatible. The message is clear. America will not surrender its financial throne without a fight. But every move the US makes, China counters with equal precision. And the world realizes this is no longer Cold War 2.0, it's Currency War 1. With currencies battling for global loyalty, nations begin forming new alliances, not based on ideology, but mutual survival. BRICS Plus expands into a powerhouse of 20 nations, representing half the world's population. They unveil a shocking proposal, a shared settlement currency backed by a basket of oil, lithium, gold, and wheat. It's not a new dollar, it's something more dangerous. A currency that cannot be controlled by one nation. Meanwhile, Europe struggles with its own crisis, fractured economies, rising energy costs, and geopolitical pressure. Whispers spread in Brussels, maybe the era of the US dollar umbrella is ending. Latin America builds a regional payment bloc. Africa launches a continental digital coin. The Middle East creates a new oil benchmark, not tied to dollars. What once was a world of one dominant currency is now a chessboard of competing financial kingdoms. And the board is getting crowded.